All right, folks, it's time. It is time to talk about the second exam. All right. So this is always the one that I kind of have to, I don't know, raise my voice a little bit, yell, saying, make sure that you take this one seriously. You have taken the first exam, have a good idea of what I'm expecting and the kind of content Usually there's not a significant change in performance from the previous exam at a class level, but I tend to see a lot of variance at the individual level. I did have students who did really well in the first exam that cut their scores in half in the second exam. I had students who did poorly on the first exam that did really well in the second exam. It's all about your approach on this particular one. So I'm just going to go ahead and reiterate my points that make sure that you study all of the contents in the study guide. Just because I cover it in the study or in this review does not mean that it won't be on the exam. The stuff that I'm going to tell you about is probably the most likely, but that doesn't mean that it's 100% going to be the case. Make sure that you are following the content that are following along with the videos that are on YouTube. You review that. If there's anything that you're not familiar with, make sure you review the slides, but also your notes. There were a lot of things that I talked about in the slides that had corresponding notes that I stopped and made sure everybody took notes on it. If you need to review the lectures to get those, that's fine too. But don't just rely on just the exam, the practice exam material. Don't rely just on the slides themselves. Use the whole body of your content. And most importantly, this is something that just doesn't happen as much as I would like. Ask me questions. Okay, if you're confused about something, send me an email. I will tell you that the amount of time that I've spent in office hours talking to students in this particular class, I can count on 0 fingers. Yeah, actually, if I said hours, it could be 0 hours. It rounds down to 0 hours. There have been people who come to my office, but it's usually pretty short discussion. I'm more than happy to have discussion if there's concerns about something on the exam. If you have questions after the fact, I can't help you, but I can help you before the fact. So make sure that you are diligent in those. Its format is exactly the same as the previous exam. It's going to be 12 multiple choice questions. I believe, yeah, there are 2 problems on this one. I said 1 or 2, but it's definitely 2. Real quick breakdown of material. There will be 1 question from the professional judgment framework, which was the stuff that we covered right before the exam review last time. There will be 3 questions from chapter 6. These are multiple choice questions, by the way, my apologies. 2 multiple choice questions from chapter 7, 1 multiple choice question covering the sampling stuff we covered in chapter 8 and 9. 2 multiple choice questions over chapter 17, which is audit conclusion, 2 multiple choice questions over chapter 18, which is the audit report, and then 1 multiple choice question over chapter 21. So pretty much a even breakdown of the material. I kind of alluded to some of the stuff's more important than the others. The things that you should definitely focus on, the stuff on controls, and the stuff on audit conclusion and audit reporting. Those are going to be the biggest priority. If you only find yourself with limited time and can't study everything, I would definitely focus on chapter 6, 7, and 17 and 18. Those 4 chapters are going to take the majority of the content. In fact, the problems, 1 problem will specifically come from chapter 6 and 7, okay? And then 1 problem you already know about, because it's going to be very similar to the one that's in the practice exam. It's going to be a spot the errors in the audit report question, which is chapter 18. Those problems are worth 12 points each. The audit report one, 5 errors. The errors vary in points to difficulty. Not every single error is worth the same amount of points. So usually it's basically 5 errors. 3 of the errors are going to be worth 2 points. 2 of the errors will be worth 3 points. And the ones that are 3 points are the ones that are a little bit more challenging to identify. All right, so let's go ahead and break this down. First page of this stuff, okay? Probably minimal stuff that you need to know from the previous exam. As I said, even though we're not covering stuff from the first exam explicitly, it all compounds. You do need to remember all this stuff moving forward. You will see 2 pages of this on the study guide for exam number 3. You will see stuff exam from exam 1 and then stuff from exam 2. Make sure that you review this material, and if you've forgotten it, make sure you relearn it again, because you will need to know this moving forward, not just on this exam, but the next exam as well. That being said, let's get into the content that you need to know. So as far as professional judgment framework, I'm just going to tell you one thing. There's a 100% chance that my question will come from one area, and that's this area right here, the 4 tendencies. So please make sure that you know the tendencies. I would strongly, strongly recommend that in reviewing this, you go to the book. In the book, there's the professional judgment framework section, which is what I based my lecture off of. And you read the sections that cover these 4 tendencies, okay? Because they talk about specifically how they relate to auditing. So that would be an easy way for you to get the coverage on that. All right. Chapter 6. One of the very first things I want to talk about with chapter 6 is knowing one of these diagrams is one thing that I brought up multiple times. It's kind of the backbone of what I talk about with respect to this course. It's this thing right here. It's the actual symbol that's in the bright space for this course. It's basically our control sequence. All right. So we know what the risk is. We associate a risk with a management assertion. They're basically synonymous with one another. A control should be implemented in response to the risk, okay? And the control relates to whatever the assertion that's it's supposed to be countering or to be addressing. And then we as auditors are responsible for testing the control, all right? That is the control sequence in a nutshell. Understanding this will lead you to a lot of success in this chapter. Not understanding this will lead you to a lot of failure in this chapter, predictably, okay? So this is the baseline. You need to understand this before you can move forward, I think. This is also really important moving forward as far as we're going to be talking about in the business process chapters, because we're going to be talking a lot about testing controls with respect to business process areas. All right. 3 components of internal control into the COSO framework: reporting, operations, compliance. Which one's generally most relevant to a financial statement audit, guys? Reporting, because we're auditors. We're concerned about financial reports. Components of internal control. You guys should remember this from AIS. I always ask questions about the COSO framework, okay? So know the COSO objectives, know the COSO components. When I say know them, it's not just their names. You need to know what each one of those are responsible for. Also, you should probably spend some time reviewing what I talked about in the chapter, talking about what auditors' concerns are with respect to each of these components, okay? So make sure that you have a very strong knowledge of this area. This is one of those priority areas that I do in every single one of my courses. And it's so a really good understanding, detailed understanding. So everything that you learned in AIS, plus the new stuff we learned in auditing, this is all stuff that I think is very, very relevant and important. So spend some time covering that. When should an auditor use a substantive strategy? There were some slides on this. You might want to take a look at this. This was chapter 16, this first set of slides, slide 13. There were some scenarios where I talked about when an auditor should use some substantive strategy. Primarily, we're talking about when we cannot rely on the controls or when it would not be efficient for us to rely on controls. That's when we're going to be utilizing a substantive strategy. This will become very relevant in a few of our business process chapters moving forward. One of my favorite things to talk about in any class is 3 limitations of an entity's internal control. Make sure you understand the differences between those and understand why they are limitations. Basically, the answer to this question is, it doesn't matter how good our controls are. There are some things that controls can just simply not account for, okay? And you need to understand why those are the case in each of these 3 scenarios. Area that I think gets overlooked, okay, under focused is this area right here. So we talked about the different phases of the audit that you can use evidence, okay? I'm not going to ask you about specifically substantive testing or risk assessment. I did ask you about that on the first exam. I won't reiterate that on this exam, but it's been highly likely that I'll ask you about different types of evidence that can be gathered during controls testing, because we covered controls testing in this particular section of the course. So make sure you review this. This is stuff that, again, is just a reiteration of what we covered back in chapter 5, but it's still really important. Also, you might want to make sure you remember the technical definition for a walkthrough. We talked about the rote definition of a walkthrough back in chapter 5. I said it's a combination of all these other things. I actually gave you a technical definition for a walkthrough back in when we covered it in chapter 6. It's basically taking a transaction from inception to the time that hits the financial statements and seeing that how it hits every single step in the control process. So make sure you go back and review that. All right. So yeah, this is something that I think it's gets overlooked because it was part of chapter 5, but students tend to forget this information here. All right. Chapter 7, 2 dimensions for evaluating control deficiencies, likely magnitude. Make sure you review that chart that I gave you in the slides. It was slide number 6 that talks about how do we have to evaluate these. Remember, it has to be at least reasonably likely to even consider the possibility of a control deficiency. If it's a remote possibility, then we don't consider it any type of control deficiency. That's when we say it's not a control deficiency at all. If there's a reasonable likelihood, then that's what we consider magnitude. If it's small, control deficiency. If it's medium, significant deficiency. If it's large, material weakness. Steps in performing the audit of ICOFR. Okay, I'm going to tell you this right now. There was always a question on this series of steps. There are 5 steps here. 100% chance of a question here. And I will say in every single tag class that I've ever taught this, which is now going on 9 years of teaching this class, students perform very poorly on this question or these questions in this area. So spend some time. We spent about half of our class talking about these 5 steps and what they represent. Please make sure you review that content. I will absolutely promise you there will be a question from this, okay? And so if you say, I didn't expect a question on this, I'm going to come back to this video and show it to you, okay? So please make sure that you review that, okay? Let's see, probably the most important aspect of this, not the only aspect I may ask a question on, but the most important aspect is going to be evaluation of identified control deficiencies, okay? So this is kind of the steps in the process. So this is going to be an after the fact conclusion. This is after we've performed our test of controls. We have to evaluate the impact of those control deficiencies. That's where we assess the type of control deficiency that's going to be. Control deficiency, significant deficiency, material weakness. This is the most important of those 4 steps, but all 5 steps are really important. What happens if a management fails to provide written representations related to ICOFR? We did cover this very briefly. This not likely that I'll ask a question on this, but I do want to address this because I think it was worded poorly in the study guide. This is what we consider to be a scope limitation. Okay. I will say right now, actually, I can tell you right now, there's no question on this. Okay. Yeah. It's on the study guide and I realize on the study guide, I should always remove it. And so let's just do this. There. Okay. All right. There's a blank where that used to be. Oops. There you tried to be a blank where that used to be. There we go. Okay. Blank where that used to be. Differences between control deficiency, significant deficiencies, and material weaknesses. This is, again, one of those areas that I won't say likely, I'm 100% going to ask a question about, okay? And I'm not going to tell you if it's multiple choice or if it's the problem or if it's possibly both, but I will ask questions in this area. So make sure you understand what type of audit opinion is issued for each type of deficiency. Control deficiency, unqualified. Significant deficiency, also unqualified. Material weakness, that's when we have an adverse opinion. We can also have disclaimers of opinion if we have a scope limitation. That's not as relevant, but it's still important to note. Who does the audit report to regarding each of these types of deficiencies? So remember, if it's a control deficiency, we report to management. If it's significant deficiency, we report to management and the audit committee. And if it's a material weakness, we report to management, the audit committee, and externally. Okay, it gets included in our report. So yeah, note that. I also want to mention this area with respect to differences between control deficiency, significant deficiencies, and material weaknesses. We did have some homework problems on this, but as I said in the homework problems, they only gave you the choice between significant deficiency and material weakness. On the exam, I may ask you to identify what type of deficiency it is. There are 4 possibilities. It could be not a deficiency at all, which means that it's not likely to happen. Okay. It could be a control deficiency, means that it's likely to happen, but it's a very small effect. There could be the possibility of significant deficiency, which is a medium effect, and the material weakness, which is a pervasive effect, a material effect. Okay. You do need to be able to make the distinction between all 4 of those. Good question, Troy.
Would a no deficiency be a situation of like where the controls are limited? So if there's like collusion or management override?
So when in a situation where there's a control deficiency, basically what you're looking at is a scenario where there's a problem with controls, but it's not likely to affect reporting. So basically you identify a control deficiency and say, well, this control is deficient. And they say, yeah, but we never have any transactions flow through this area. So it's unlikely that there will be a problem. That's where we'd say, well, they don't need a control there because there's no transactions flowing through that particular part. So that's where the likelihood comes in. Yeah, it's kind of like we're trying to evaluate if something's going to happen. If it's not something where there's any activity, then there's not necessity for control. Good question. All right. Chapters 8 and 9. There will be a question on here. It should be pretty straightforward. Please make sure you understand the kind of sampling concepts and how they affect sample size. Also on attribute sampling, make sure you understand that. That's going to be the likely focus of my questions in this area if I do ask that, because attribute sampling is much easier to conceptualize than variable sampling. Well, what phase of the audit is almost exclusively used? The answer is test of controls. Because remember, attribute sampling is answering a yes/no question. Does the attribute exist? For controls, we're trying to determine, is a control effective? Yes. Or non-effective? No. So that's where we use it. All right, chapter 17. Okay. one of the things that I like to ask questions about, because I like talking about, is subsequent events. Okay, so that means everything in the subsequent events area. So make sure you understand the difference between a type 1 and type 2 event and how we treat each of those in the current period financial statements. Okay, because the treatment is different depending on what the type of event is. Also, dual dating. Remember, dual dating that limits a auditor's liability to the specific event reference. Okay, when we extend liability, that's when we change the audit report to that the date of the subsequent event. Going concern is one of those areas that's going to be relevant in a lot of chapters, so we need to talk about it. So going concern, what are the steps in the going concern process? Okay. Is there a problem? Okay. Does substantial doubt about the entity's ability to continue as a going concern exist? If the answer is yes, we go talk to management and say, hey, what are you doing about this? All right. So assess management's plans. If there's still an issue, if we still think that the substantial doubt about entity's ability to continue as a going concern exists, then we have to ensure that management discloses the financial statements, and we also add an explanatory paragraph to our audit report. Okay, so please make sure you remember that. That's relevant to chapter 17 and chapter 18. Subsequent discovery of facts discovered existing at the auditor's report, the date of the auditor's report. That's basically saying if we come to the end of the audit, we're sitting on the beach in Hawaii, and they contact us and say there was something that you needed to know at the audit, but we didn't tell you. That's subsequent events after the audit, after the date of the auditor's report. Okay, and that's also after the date of the issuance of the financial statements, or after the issuance of financial statements. So that's after the engagement's done, and you say, and the auditor or the client comes to you and says, "There's a problem. We forgot to tell you something." So if that's the case, there are two scenarios. The first scenario is you go and do the testing, and they say, "Hey, we're sorry about that." You say, "It's no big deal. I know you didn't do it legitimately. Testing looks good. We'll reissue the financial statements with just an explanatory paragraph." The other scenario is you go to the client, say, "All right, we're ready to do the testing." They say, "Yeah, we'd rather you not do that. We're happy with our report." If that's the case, you have to basically tell them, "Well, you can't use our audit report now because our audit report's based on information that was inaccurate." You got to notify the regulatory agency in charge of that client, which is for public companies, usually the SEC. And you also have to tell everybody who needs to know about or relies on the financial statements about this issue, which if we're talking about a public company, it's usually going to be covered by disclosing it to the SEC. All right, chapter 18. So 8 elements of the standard unqualified audit reports. Okay, I told you already that knowing these 8 elements will probably give you about 50% score on that problem. So if you're happy with 6 points out of 12, that should be your goal, making sure you know those 8 elements. If you're like all Truman students, you're not happy with 50%, okay, then you probably should know the reports. So learn that standard unqualified auditor's report really, really well. Do you need to memorize it? No, but you should know the composite elements fairly closely, okay? You should at least know the 8 elements that are listed here. You should probably know in depth what each of those 8 elements contains. Once you've done that, go and make sure you're familiar with the changes that have to occur for each of the different types of opinions, okay? Absolutely 100%, I'm going to ask you a question similar to the ones in the practice exam where you have to spot the errors. Some of those errors will be harder to spot than others. Some of them will be easy, okay? I expect everybody to get really close to 50% at least on that, if not more. I would love it if everybody got 12 points out of 12 on that, but I'm not going to make it easy for you, okay? Some of those will be challenging to find and will only be findable by having a composite knowledge of the audit report. All right. Explanatory paragraph, be able to identify, explain examples of each, okay? So, or explanatory language, I should say. Okay, let's talk about what these. So modified wording, there's only one example of modified wording, okay? So modified wording basically is when the auditor is, when there's a secondary auditor who's performing the engagement, and the primary auditor is not willing to accept responsibility for their work, okay? So I'm the primary auditor. I've got another auditor that's doing other parts of the engagement work, and they're doing their job and they're doing their job fine. But it's like, look, I'm not going to take liability for their work. So in that case, I have to modify the language in the audit report to say, based on our work and the work of other auditors. And that occurs in the opinion and the basis for opinion section. That's the word modified wording. Also in this scenario, we would add an explanatory paragraph for the PCAOB audit report. Basically, all that means is we would explain the situation as well. To clarify, if I'm the primary auditor and I do take responsibility for the work of the secondary auditor, then I would not have to change the wording. Okay, I would not have to modify wording. So that's a little important distinction. If I'm the primary auditor and I don't trust the secondary auditor, or at least I'm not willing to take liability for the secondary auditor, modified wording. If I'm willing to take responsibility for their work, no change whatsoever. Okay. Explanatory paragraph, there were 4 examples, be able to identify, explain examples of each. Okay, so 4 examples, ICOFR paragraph, going concern paragraph, issues with comparability from prior periods, which is fairly subjective because that could mean changes in accounting estimate in some scenarios, especially if they have material effects. And then other matters, which is basically everything else that's possible. Okay, those are the 4 types of situations. Conditions for departure from the unqualified report. Qualified, we have a scope limitation that's material but not pervasive. We have a departure from gap that's material and not pervasive. Disclaimer of opinion, we have a scope limitation that is pervasive. The other one that's really weird scenario that comes up occasionally but will not come up in public company or audits is a lack of independence on the part of the auditor. Remember, we had a homework problem on that where the guy was like doing the audit. He had a 10% ownership interest in the company he was auditing. He had to issue a disclaimer opinion because you can't issue an audit opinion if you're not independent. Adverse, that's only one scenario. That's a pervasive departure from gap. All right. Chapter 21. Chapter 21, all I'm going to tell you is that I would tell you to focus on those 3 tables that I had you focus on for that chapter. That's where the questions will come from. So be sure to know the level of assurance, citation risk, and type of report and report distribution for each type of engagement. Okay, that was the first table. The second table was a list of ACCT services and which type of engagements could be actually performed for each ACCT service. And the third table was the category of assurance services to identify whether independence is required, report is required, and the levels of assurance are provided. I'm going to try to keep that simple for you guys because there's only one question in this chapter, but it will come from one of those 3 table areas. Okay, there's a lot of content in those 3 table areas, but if you spend enough time looking at it, it should be fairly straightforward. All right. That covers it for the study guide. Are there any questions? Anything that I did not cover that you are a little bit unclear about or like some clarity? All right, let's talk about the exam then. By the way, in the exam, the ordering is a little bit different. And when this is a previous exam from another semester, I did in that semester cover chapter 21 before I covered chapter 17 and 18, which is why the ordering is weird. The chapter 21 question will come last on your exam, but it comes like, it's like question 8 in this exam or something weird like that. All right. Auditors may be prone to rely on evidence that is consistent with the pre-existing belief and expectations. Okay. What type of judgment tendency is described above? So this is an example of one of those 4 types of questions. So what are we describing here? Sure sounds like confirmation tendency to me. Confirmation tendency or confirmation bias. According to section 404 of Sarbanes-Oxley Act 2002, what is an auditor's primary responsibility with regard to its respect to its client's internal controls? Is the auditor responsible for design and maintenance? Who's responsible for that? Management. Are they responsible for implementation? And that's also management. So understanding assessment of internal controls. Yep, that's an auditor's responsibility, which means D cannot be correct. Much like the trend in all of my classes, all of the above is usually a trap. Okay. All of the above is usually a trap. That's not to say all of the above will never be a correct answer, just often not the correct answer. I'd say 1 out of 4 times it's probably the correct answer. Weird how that works out, you know, weird how that works out. Assessing control risk at a lower level than high most likely will involve what? Okay, so what are we talking about with respect to this? Okay, this is the question about the control sequence. Okay, why do we use the control sequence? Okay, in order to understand the control sequence, what we're trying to do is we're trying to evaluate controls and see if they are effective. Because if controls are effective, we can reduce the amount of work we have to do in other areas. Okay, is that that would be our ultimate goal? That was what we talked about in the previous chapter. So the control sequence, what are we trying to do? Well, let's just go back and look. Trying to make sure that we identify the risk and the associated management assertion, know the control is implemented to respond to that risk, and then identify tests of controls over that particular control. All right, with that knowledge in mind, okay, with that knowledge in mind, changing the timing of substantive procedures by performing most substantive testing in interim, would that be something that would result in assessing control risk at a lower level than high? Be required to do that? Nope. Usually, actually, that would probably be the opposite direction because changing timing to interim usually provides less assurance, not more. Identifying specific internal controls to relevant specific assertions. What do you guys think? That's something we just talked about. That's part of the control sequence. We have to know what assertions are relevant to controls that have been implemented, because if we don't have a control that addresses a specific assertion, we could have a problem with control risk. So B is probably our answer, but let's go performing less extensive substantive procedures with smaller sample size than originally planned. That would be a result of assessing control risk level high, but that's not going to be what's involved in that. Okay, so C is not correct. Reducing inherent risk for most of the assertions relevant to significant account balances. Can we control inherent risk as auditors? No, that's outside of our control, so we can't reduce inherent risk. Which of the following is a reason why testing of a specific control might take place at interim? So interim testing is generally less reliable than our year-end testing. So why do we do it? Okay. Well, that's a good question. Why do we take exams at midterm instead of just doing one exam at the end of the period? That would be a perfect assessment of all your knowledge. Just cancel these next exams and just do a final. What do you guys say? That would be brutal. Why? Okay, because you guys are busy and you got a lot going on. All right. And you're trying to make sure that you don't have too much on your plate at one period of time. So we segregate that out to different points. So external auditors are generally busier at year-end than interim. Does that sound like a pretty good explanation of what I just talked about, or at least analogy for what I talked about? Yep. All right. I guess the analogy was what I explained, and that's the answer. Yeah, whatever. I'm having trouble talking today. Casey Staden, quite a name. CPA is conducting an audit of internal controls over financial reporting. I coffer in unison with their annual financial statement audit of ACCT Industries Incorporated, or 4I. Which of the following items would not be one of the steps that Casey would follow in identifying which controls to test for our audit of ICOFR? Okay. So there's two ways you can approach this question. First of all, you can know what the three first steps are in planning an engagement over an audit of ICOFR, which, remember, I told you guys that was really important. So let's go ahead and take a look back at the study guide. Oops, there we go. It's right there. Plan the audit of ICOFR, identify controls to test, evaluate the design, test, and design, test the operating effectiveness of the concerning control. Okay. Okay. So first of all, yeah, let's see. Did I get that right? I feel like I was like, okay, yeah. Yeah. So, all right. Sorry, I apologize. Steps of identifying, testing, control. So what was that actually step on the planning? Identifying living level controls, identifying significant accounts, and understanding likely source of misstatement. Those are the three steps I was talking about. So I got a little bit carried away. So those three are there. But let's say that you didn't remember that, which is fine. Okay, it's fine. Let's think about what's happening here. She is trying to determine what controls she's going to test. Okay, which controls she's going to test. Which is most likely going to be something she would not do in that step. Forming an opinion of the effectiveness of audit ICOFR. That probably would entail that she's actually tested the controls to be able to form that opinion. This would occur after she's identified which controls to test, not before. So A is our answer. All right, Casey Staden concluded her audit over 4I's ICOFR. There's only one noteworthy item came to her attention during the audit. She concluded this item can constitute a significant deficiency based on Casey's conclusion to which party should she report her findings. Who gets reported to for a significant deficiency? Management? Yep. Audit committee? Yes. Externally? No, just the management of the audit committee. Okay, so B. As part of her testing of internal controls over financial reporting, Casey Staden's employees selected attribute sampling techniques. Which of the following adjustments to Casey's inputs most likely to result in Casey having to increase the size of her sample, assuming all of their inputs remain the same? So effectively, if we keep everything else the same and change this one item, she would have to increase her sample size. Okay. All right, larger population. Does population have a discernible effect on sampling for large enough populations? Not really. So A is not our answer. Larger sampling risk. If sampling risk becomes larger, what happens to confidence level? Becomes smaller. Confidence level becomes smaller. If we have smaller confidence level, do we need a larger sample size or a smaller sample size? We need less confidence, so we probably need smaller sample. Okay, so that's not correct. Smaller expected population deviation rate. Okay, so smaller expected population deviation rate. That means tolerable deviation rates here. Smaller tolerable expected population deviations here. This goes down. What happens to the distance between the two? Becomes larger, and we know that that's inversely proportional to sample sizes. The distance becomes larger, the sample size becomes smaller. Okay, but what happens if the tolerable deviation rate becomes smaller? The distance also becomes smaller, and so our sample size becomes larger. So D is our answer. In addition to her role as a top-notch auditor for 4I, Casey Staden also provides attestation services for her clients. On a recent client engagement, Casey made the following statement in her attestation report. We are not aware of many material modifications that should be made. Based on the above language, what type of attestation engagement did Casey perform? What type of language is that? It's negative assurance. What's the only type of engagement that provides negative assurance? A review, So that's D. Question number 9. Casey statements concluding her testing for financial statement audit before I. As part of her testing, Casey must perform procedures designed to identify potential and contingent liabilities that have not been properly accrued or disclosed. Which of the following procedures listed below would be the least useful for this task? Okay. Identifying contingent liabilities. Okay. Could we inspect documents related to guarantee arrangements? Yeah, that would be a good one. Review the minutes of board of directors meetings. That'd be a good one. Sending confirmations to financial institutions they do business with. Yes, that's all possible. Could we send a legal letter out to the attorneys? We can do that, but will it help us with identification? No, remember we talked about that at length, that this is usually going to be something we do as part of corroboration. Once we identify the possible issues, we talk to the lawyers and say, hey, here's what we found. What do you know about it? We cannot go to them and say, we know nothing. Tell us everything we need to know, because they're not going to tell us a thing. They're going to say, hey, not my responsibility. That's on you. Prior to the issuance of Casey Staten's audit report, 4I settles an outstanding lawsuit for an amount different from that recorded as a contingent liability in the audited financial statements. What steps should Casey insist 4I take with respect to this settlement? Is this a subsequent event? It is a subsequent event. What type of subsequent event do we have here? Type 1 or type 2? Type 1, okay, the conditions existed at the balance sheet date. There's only one treatment for a type 1 event. That treatment is we have to restate the financial statements, okay? Adjust the financial statements to reflect the settlement of the lawsuit. Which makes sense because they probably want to say, hey, we don't have to pay as much in our lawsuit. We're in a better financial position, okay? What if it was a type 2 event? What are the possible circumstances we have to do? Do we have to disclose the event? Yes. Could we possibly issue pro forma financial statements? Yes. Okay. Okay. That's not a subsequent event, then we don't have to take any steps with respect to the settlement. As part of the auditing procedures for one of its foreign subsidiaries, 4A has engaged a secondary auditor to perform necessary testing. Casey Staten has reviewed the work of the secondary auditor and is satisfied with the quality of its work. However, she is unwilling to take responsibility for the work of the secondary auditor. Assuming that Casey issues an unqualified report on the audit of 4I's financial statements, what changes would be necessary for Casey to include in the report? All right. So we know modified wording has to be included here. Okay. So modified wording in the opinion section and the basis for opinion section. Also, this is a publicly traded company. Okay. It's a publicly traded company. Did I say that in their case? Yeah. Yeah, I do, because I say unqualified report. It has to be publicly traded because unqualified. So would we add an explanatory paragraph below the opinion paragraph? Yes, we would. Yes, we would. Okay. So all of the above changes would be required. We have it all of the above. Ding, 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 ding. It's a red letter day. Okay. All of the above changes would be required for this particular situation. With respect to the 4I audit, Casey is also responsible for reading certain information to ensure it's consistent with the information presented in 4I's annual financial statements. Which of the following would be an example of this type of information? What was our example in class? That Big Mac, okay? The annual report, okay? 4I's annual report, that would be the example of this. Remember, sunshine and rainbows, but it still has to be consistent with the financial statement information. All right, moving on. Internal controls are quite simply the greatest thing ever. That is an actual quote that I made. That's an actual quote that I made. All right. One critical area of accounting is internal controls, or critical area accounting internal controls, not is, but yeah, there's there. If you choose to pass to cost accounting, aka the dark side, or taxation, not really accounting, you will need to have a detailed understanding of the role of internal controls in an organization, how they're supposed to work. So in class, we discussed something called the control sequence. Recreate the diagram I used to represent the control sequence and briefly explain the diagram. We've already looked at this multiple times, but what do you guys say? Want to look one more time? Doesn't matter if you do. I'm going to put it up anyway, because I'm very proud of this diagram. Very proud of this diagram. So again, we characterize risks in an organization according to management assertions, okay? The assertions that managers made with respect to the information in the financial statements. We have to know that controls are responses to risks, and so controls are associated with a particular assertion, all right? Our responsibility as auditors to test those controls to make sure they are operating effectively, all right? So that's basically, in a nutshell, the explanation for this. Again, if you know this, it's unlikely I will ask this exact same question on the exam, but if you know this, you should feel really good about where you're starting at, your starting point here. If you don't understand what's going on here, then you probably need to rewatch that chapter 6 lectures again, because this is really the kind of crux to all this. So it holds everything together. All right, the COSO internal control integrated framework specifies 3 objectives. Which of these 3 objectives is most relevant to a financial statement audit, and briefly explain why this objective is the most relevant. So what are 3 objectives? Reporting, operation, and compliance. Okay. We already said which one's the most important, but let's say it again. Which one is it? Reporting, because we are financial statement auditors, and we're concerned about the information that goes in the financial statements, aka reporting. Controls are great, but they're not perfect. Perish forbid, who wrote this? I did. Okay, wait a minute. Okay, in fact, internal controls are subject to certain inherent limitations to their effectiveness. What are the 3 inherent limitations of internal controls? Okay, so we talked about that in Taco Bell. Somebody takes your money and they put their money in the cash register and give you the change. And you say, hey, I need somebody to unlock the cash register so I can get my change. What's that? Management override, okay? Then sometimes things happen because we're human. What are those? Errors or mistakes, okay? And then sometimes Brett and Hudson will work together to try to bypass some of my controls, okay? Which I'm going to be on my lookout for you on this time, guys. But if they're working together to bypass controls, what is that called? Collusion. That's right. All right. My eyes on you. My eyes on you. Hudson looks scared. Assuming you have been assigned to perform sample testing of a client's internal controls, information regarding the sample inputs and results of testing are provided below. Based on the information above, state whether each control is operating effectively or not operating effectively. There are 3 controls. You should have 3 different answers, okay? So what do we start with? We're looking at tolerable deviation rate and trying to compare that to something. So for tolerable deviation rate, 8%, 6%, and 9%. What are we looking for after that? We're looking at the maximum tolerable deviation rate, the upper error limit, okay, the upper error deviation rate. What is that? That is the sample deviation rate plus an allowance for sampling risk, okay? So let's go ahead and do some math, all right? Our sample deviation rate in part 1 is going to be 3 divided by 100. That's pretty easy math. That's 3%, okay? Then we add our allowance for sampling risk of 4.5%. So 3% plus 4.5% is 7.5%. 7.5% is less than our tolerable deviation rate of 8. So what do we conclude? The control effective or not effective? It is effective. It is effective, okay? Next, 4, population of 100, that's 4%. I'll add allowance for sampling risk of 4%. 4 plus 4 is 8. That's greater than our tolerable deviation rate, meaning that our control is not effective, okay? Then we have 6 out of 200, which 6 divided by 200 is 3% again. 3% plus 4.2% is 7.2%, which is less than 9%. So the control is effective. Very good. Very good. By the way, in this particular question, there's only 3 points, but if I ask you a question where there was multiple points here, I would encourage you to walk out your logic behind this. I may give you partial credit even if your determination is wrong. Okay, if I ask a question similar to the exam, more information you can provide, the better. If you just said not effective, effective, not effective, since these are only worth 1 point apiece, I would still give you just 1 point. But if I ask you more points for more points on this, say I said 2 points each, 1 point would probably be based on your assessment. The other point would be based on your work. And so if you did the right work but got the wrong conclusion, I may still give you partial credit on that. All right, guys, ready? Here comes the fun part. Adams and Adams LLC, a registered firm with the PCAOB, just completed the audit of Sean Mitchell Company, a publicly traded company in the United States. Due to problems encountered during the audit, Adams and Adams issued a disclaimer of opinion on its audit reports. All right. So I give you information in the audit report and you have to answer this. All right. The problem is that there are 5 errors in this report. Okay. Now note, the explanatory paragraph on ICOFR has not been included. I did not include that because I wanted to save space. Also, written signatures didn't be excluded because I'm really lazy and don't want to try to put a written signature in every report. So do not count those as errors. What are the 5 errors in this report? And by the way, this is actually a pretty good job because Adams and Adams, those are my nieces. One niece is 14 and the other is 11. So for a 14-year-old, 11-year-old, they did a pretty good job on this report, I think. So round of applause for them, okay? Yeah. Anyway, let's just go ahead and go through. So what was our general rule for disclaimer of opinion? What do we say has to happen in disclaimer of opinion? So disclaimer of opinion was our most complex scenario. But our general guideline was, if there was any reference to the work that was performed, it has to be changed or eliminated, okay? What was the very first change that had to take place? Well, the very first one technically was this disclaimer of opinion on the financial statements, which that's included in there, okay? But there's another one really shortly after that should have been included. Which one's that?
Because instead of we have audited,
Yeah. So this should be changed to we were engaged to audit because we did not audit, okay? We did not audit, we were not able to. That was what a scope of limitation talks about. We tried to audit, but we couldn't do that. I said this is a really important distinction to make. All right, so talked about what the nature of the opinion is, okay? Now we're moving on. Going down to the basis for disclaimer opinion, are we missing anything? So we need a paragraph after the opinion section detailing why did we issue the disclaimer opinion? This opinion right here is not enough. We have to explain exactly what happened with this inventory count that we wanted to do and what were the quantitative effects. So there should be a big paragraph right here that explains this whole disclaimer of opinion. It's missing. So by the way, this one right here, this is worth 2 points. This missing paragraph, that is worth 3 points. Okay, that is worth 3 points. All right, basis for a disclaimer of opinion. All right, is that good? Everybody happy with that? So the statement is correct. What about the paragraph below? Is there any problems with that paragraph, the next paragraph? So we got our statement on management responsibility. Everybody happy with that? We got a statement on auditor responsibility. Everybody happy with that? No. Our responsibility is to express an opinion on the company's financial statements based on our audits. Are we expressing an opinion? We are not expressing an opinion. We're disclaiming an opinion. This statement has to go away, okay? This should go away. So let me just do this. I'm just gonna, oops, not underline. What's the matter with you? There we go, strike through. That gets eliminated, okay? So here, we're missing a paragraph. Let's just type that in. Missing paragraph. And we have audited. This statement should be different. All right, this one's a really important one. This one's worth 3 points, by the way. You had to make sure you identified that responsibility statement is gone. It's a really important one. Speaking of which, what do we call it when we have disclaimer opinion? What does that usually do to? Lack of independence is one reason, but that's not the usual default. What is the reason that we usually have a disclaimer opinion? It's pervasive scope limitation, okay? What would probably need to go away if we have a pervasive scope limitation? Scope, yeah. This entire paragraph right here is called our scope paragraph. Should be going away, should be gone, should be gone. We should not include that there. All right, so that's 4. This one's worth 2 points, by the way, because you should know that scope goes away. All right, anything else we're missing? Obviously, one more thing. Last one, 2 points. Something that we have to evaluate based on liability. Audit report date. Yeah, there's no audit report date. Yep, should be right down here. There you have it. 5 errors. So again, that's the kind of explanation or expectations I have for you on this. I know it seems like important, or there seems to like be very, very minor details, but this is an important thing that you need to know for this particular area of auditing. So again, be prepared. Your approach to this should be starting with that standard unqualified audit report, knowing that back to front. Once you do that, work on the differences, the changes that would need to occur for all the different types of opinions. Yes.
how do you want us to like mark it up? Like, is there a specific way you want us to like?
So what I would prefer you do is I did this for illustration purposes, but the way that I would do this, if I was doing this in the exam, so I would have something like that here. Okay, obviously without the 2 points, you don't have to tell me how many points everything's worth. Okay. 15 points. Opinion is missing. That's the only error. Okay. Yeah. All right. So yeah, something like that. You don't need to specify which part of the paragraph or anything, but something like this to explain that, list it out. By the way, the exam key is available on Brightspace now, so you can have access to all this information. Any other questions?
So don't mark it up like how you did.
If you want to, that's fine. Ultimately, what I'll be looking for is or I should say my grader will be looking for explanations, just to clarify that. Like if you wanted to say, for example, opinion and put like number 1, and then you could say reference to 1 right over here. So I'd like clarify that. It's because basically what my grader will be looking for is, do you know the specific detail that needs to be modified or has been modified or is missing, something along those lines. All right. But ultimately, this is where the information should come from. Any other questions? All right, like I said, if you run into any issues or anything encounter, you send me an email. If it's a lot of questions and needs a lot more explanation, set up a Zoom call or come visit me during office hours. Best of luck with your studies. I'll see you all on Wednesday.